Root IPO'd. The max was at the day of the IPO $27. Today they are at $10.71. What happened there? Now, before we even start talking about that, we need to give the disclaimer, of course, that we are not financial advisors. Everything that you're going to hear today is entertainment, not trying to solicit any investment or anything like that.
Both Clover and, more importantly, Root really don't have a large amount of their stock in float. And what does that mean? It means the number of shares that you could actually buy. For Root, for instance, probably 95 to 98% of their shares are owned by 25 organizations or individuals. And so if you think about it, the share price fluctuation, it's really only the smaller institutional investors who own X or Y, because these larger institutional investors aren't trading. A person by the name of Chris Olsen owns 20%.
And who's
Chris Olsen?
Thank you for asking.
Chris Olsen runs a VC out of Columbus, Ohio, which is where Root's headquartered, called Drive Capital. But interestingly, Drive Capital themselves only own about 1% of Root. So he himself has a lot of his own money parked here in Root, which I found pretty interesting. He owns over 20% of the company right now. But more importantly, when you look at the enterprise value, right? So backing out goodwill and all of these things, it went down from 3.9 billion to 2.6. So that's about a 50% drop in enterprise value over 3 months. They were writing $146 million in premium. At the end of first quarter, that was up to 202. That's a pretty nice jump. So in that regard, they're doing things right. Their losses, their gross loss or net loss went down from 133 million to 100 million, but they're still losing 100 million a quarter. And that kind of then feeds into this enterprise value, right?
For the people who are more detail-oriented, it was 99.6 million. But, 400,000 between friends, what is that? You see that there is a nice trajectory, especially when you compare it to Q1 2020, Q1 2019, and they are on their path. They are actually in the green. They had profit, 6 million. So where are they going and what are we missing there? Because we are still, again, the stock now is at 10.71.
Listen, I think in the end, the one other metric that's going in the right direction is their price per policy, right? Premium per policy. At the first quarter 2019, it was 770. They ended the third quarter 2021, the first quarter 2021 at 958, right? So pretty much they're gaining a couple of percentage points per quarter in premium. That's fantastic, right? But that's also tied to the fact that they're repricing. And when you listen to what they're saying publicly through their annual report or through press releases, a lot of that is driven by becoming more accurate in their pricing. What's challenging for them is acquiring customers at a reasonable price. For the most part, this past quarter, first quarter 2021, you were at $1,800 per customer, right? If you remember, they're at a $900 premium, right?
Yep.
So there's, it's going to take them
2 years,
many years to recover the marketing costs, and that's what makes them not profitable. It's not at a huge rate. It's not a huge number. And in the end, they're just acting as a broker there because they get a commission from HomeSite, which is who they have the relationship with.
So basically, I think that they sold about 9,000 policies. So if the
to use your previous comment for the numbers geeks, 8,835.
Perfect. And if it's only commission, let's assume they get 15% commission from, what is it, rent? So that will be less than $1,000 a year.
For sure, renters will be maybe $100 to $200 a policy, right? So it's not a huge contribution to their bottom line, but by the same token, they are showing as others that there's increased stickiness. So the retention rate for those kind of customers is a little bit better, and that's the same reason why you see now Lemonade moving into auto insurance.